Welcome back. Well, the stock we're looking at right now is Greaves Cotton. Now, there was so much excitement at the Auto Expo yesterday, and Greaves Cotton was not too far behind. They're looking to enter a new growth phase in 2023 with products across categories and price segments within the electric vehicle space. The company has a robust new roadmap for electric 2- and 3-wheelers and has launched a range of their new EV vehicles at the Auto Expo. They've also announced that they will be investing 1,500 crores in the e-mobility business that now contributes over 40% to their overall business. Nagesh Basavanhalli, the Group Chief Executive Officer and Managing Director at Greaves Cotton, joins us now to talk about that. Nagesh, good morning and thanks a lot for joining in. You know, this business is growing at a really fast pace, the e-mobility business for you. But I'll come to the growth trends in a bit. First, about the 6 new electric 2- and 3-wheelers that you showcased yesterday under the Ampere brand. Can you tell us when do you plan to launch these and what kind of monthly or quarterly run rate are you looking at?
Good morning. Good morning, everybody. Thanks for having me, Sonia. At the outset, we are guided by our purpose of democratizing sustainable mobility. I think we've talked about that in the past. Given that yesterday, to your point, we introduced 6 new products, 3 in the 2-wheeler and 3 in the 3-wheeler, both in the B2B and in the B2C. So it caters to different audience, different customer segments and product segments. Regarding timing, the Primus, which is a foray into high-speed 2-wheeler, the Primus will be open for bookings through our 700 odd dealer outlets in the country as of today, and it will be available in the market this quarter. The rest of the vehicles will follow over the next fiscal year in over the next couple of quarters. So Primus right now and others to follow.
All right. Just one follow-up there. You know, in Q2, you hit a record high in terms of 33,000 units that you sold, both for 2-wheelers as well as 3-wheelers. Can you tell us, what is this a run rate that you can sustain? Was it just pent-up demand, you know, that was kicking in? And now that things normalize, there are some new safety norms, emission norms coming through, so prices may go up as well. Do you see demand sort of tapering off a bit?
At the outset, the demand stays consistent. Now, by us adding more products and going after more customers, right? I think we are confident on the demand, Sonia. Because if you look at it, what have we done so far? We have invested in manufacturing, so our capacity today is 250,000 units on a single shift and going up to 500,000 as needed, right? We have invested in design and styling and technology made in India. Engineering and styling made in India, right? So invested in products and people. So what that means is the fundamental foundations are in place. The market demand, to your point, I think is sustainable. Keep in mind, you touched upon the RECs. The battery, we welcome the battery standard RECs that have come in. December 1st was the phase 1, April 1st will be the phase 2. And so short term, you will see blips, meaning when this introduction happens, you can see a 1-month blip, but over a period of several quarters or over a period of a year, we expect demand to continue.
Hi Nagesh, good morning. Good to speak to you after a while. So you're going at a run rate of around 11,000 units per month, but your capacity, as you just mentioned, is a little over 20,000 units per month. Could you tell us by when do you see you moving to that capacity, say by early FY24? Do you think you could do that? And also the ultimate aim is to go from 250,000 to 1 million. Phase it out for us. Time-wise, how do you see this happening?
So Nigel, good morning. As you recall, we were at 125. Just in recent times, we increased the capacity to 250, right? Anticipating this, and it's not just us, it's also the supply chains that have to be ready, right? So I think, the 11,000 or the 33,000 average quarterly run rate that you talked about, right? We anticipate that to continue to grow. And when you look at the trend, right, we were doing 2,000 vehicles a month just about 14, 15 months ago to kind of where we are right now, right? So I think that trend line you will continue to see. The new products that we have added, right, especially the Primus goes after the high-speed segment, the greater than 75 kilometers, the higher performance, different type of customers, the NX and the NG, which is our next generation style vehicles, again goes after different sort of customers. So we are doing everything in our power to kind of get ready with the demand and the foundation. I think as the market picks up, we believe the trend should be in the right direction. Keep in mind, Nigel, one or two quick things that I want to add. The industry has gone through chip shortage in the last 1 year, supply chain issues in the last 1 year. Some of the, if I can say, the worst is behind us. And now with the battery standards also getting in place, we believe, and with the supply chain and financing, which is a key indicator in this business, bank financing is also picking up. Some of the enablers, I would say the enablers are in place.
Nagesh, hi, good morning. Just a couple of, this is near term though. The last time we spoke, you said that B2B sales are under 10% of your overall volumes. Since then, when we've spoken with e-commerce companies, delivery companies, logistics companies, most have kind of pointed to a marked slowdown. Have you seen that in that side of the business for you?
Actually, B2B still remains a smaller portion of our business. And while we have stable customers who continue to do business with us, the idea of introducing an application-specific product, the NXU that we introduced yesterday, right, is to go after certain specific areas and customers that the applications will demand, right? So short term, we are not as dependent on B2B. So it's not affecting us because my retail and my distribution is growing and my B2C business is growing. But medium to long term, yes, we anticipate the B2B to be growing at a much faster rate.
Another thing you told us, Nagesh, was you were looking at potential acquisitions, M&A. Anything there? Anything has worked out?
So basically, again, several discussions in various areas. As and when the opportunity is right, we'll announce it.
Okay. Is the opportunity right in this calendar year?
We are working on several opportunities right now, so to speak, both India and global.
Okay, so working on several acquisition opportunities both in India and the global markets. Got that. You know, your electric mobility business is now about 46% of your overall revenues. How much do you think you can take it up to, say, by the end of FY24? What's the long-term strategy?
So clearly, Sonia, if you look at it, I think the potential is there where this will probably exceed our traditional business. And what I mean is our traditional engine business, right? So if you look at our run rate, where we have been over the last 12 to 18 months, I think, and if we anticipate the demand cycle to continue, we have done everything in our power to be ready in terms of products and manufacturing and supply chain and financing, right? So I think that's kind of what we see. We do hope that short term, the government has been very helpful with the FAME incentive as well as with the state governments pitching in. And we hope today the market penetration is about 4.5–5% EV as a percent of the overall two-wheeler sales. We hope at least until it gets up to about 10%, right, that this continues. And then I think the industry will be at an inflection point.
You know, Nagesh, you're saying that the e-mobility business is growing and even the age-old engines business was recovering. I've asked you this before. Since both the businesses are doing well, why not just separate both of them, demerge them?
Nigel, that's for the board to decide. But clearly,
but is the board even thinking about it? Have you all, given it a second thought? You know, we'll talk to you more after your numbers. But in terms of a path ahead, FY24, FY25, since both the businesses are, recovering, one is recovering and the other one is growing, do you think it makes sense to separate it?
I mean, directionally, Nigel, I mean, there is a lot of deliberation on the board, nothing that I can announce today, but definitely both the businesses are growing. You're absolutely spot on.
Okay. All right. So we will, of course, I mean, if that is the future, then at some point we'll wait by for some clarity on whether you separate the businesses. Just one final question, because this e-mobility business is something that has grown in the last 3 years. I think in Q1 of FY22, you had just 15 crores of revenues, and now you're sitting at 300 crores plus per quarter. What can you take this run rate to, say about, 5–6 quarters down the line? Are you looking at 500, 700 crores per quarter?
So I look at it slightly differently, Sonia. If you look at, and that's why I go back to the market penetration. Today it's 5%. of the two-wheeler market. If you get to say a 10% market, right? Ideally, in the next 4 to 5 years, people anticipate conservatively a 35% conversion, right? That gives you a good 6 to 9 million units, right? Depending on the size of the market in 5 years, right? So when you look at that, and we are a 13 to 14% market share player today, and we anticipate with our new products to protect and defend and grow our market share. So I think if you do the math, the numbers add up for themselves. So the overall, and hence the reason for adding manufacturing capacity and adding the products and adding some of this.
All right, we'll leave it there. Nagesh, great to have you with us. Appreciate you joining in with that perspective. Thank you and good luck.
Thank you.
Well, 6 points lower on the Nifty. We're at, what, 17,891.